Okay, welcome everybody to Finance 333 Week 1. Welcome. I hope none of you have anxiety about being in a upper level finance class. This is not going to be a corporate finance class where you use a lot of accounting or a lot of math even. It's a pretty straightforward course on the fundamentals of investing, and we're going to be talking about all kinds of different things tonight. We'll give some good information about behavioral finance, and that's just glossy terminology for why people make the decisions they do regarding their investments. So that should be an interesting conversation. We also may have enough time to cover a little bit about bonds, but basically, as your readings and tools indicate for this week, we're covering chapter 9 and 10 in the ebook. And I've checked the ebook a couple different times. It's working great for me. If you have any problems, be in touch with the school right away, if you are having access issues to the ebook. But welcome to everybody here tonight. I'm glad we've got a good group. Hopefully you all are folks that can make it in the future. It's a lot more fun. These classes are a lot more entertaining, a lot more fun, I think, when we have people participating. I've been in some classes and taught some classes over the last 6 years where we didn't have enough participants, and it's not as much fun. So thank you for being here. Thank you for making the sacrifice to join in on the call. And one of the things I'll point out right now is it's not required of you all to be here during the live session, but I do think that you all have a slight advantage over others who cannot make the live session. And I understand that, some people just can't come. This is really late on the East Coast. It's also, Monday night. People might work nights. There's all kinds of different reasons why you might not be able to come. But for those of you who are here tonight, I think you have a slight advantage. And the reason is because you're able to ask questions, right? So you have me live to answer any questions or concerns, and you can keep asking until you get the answer or until you get an explanation that helps you to understand what you're trying to accomplish. My main objective with these sessions is to make sure that you come away from the session feeling confident that you can accomplish the week's coursework without any problems, okay? So we're going to go over every single week how you're going to accomplish your assignment, assessment, and discussion board without any problems. This week's a little bit different because we're going to cover some housekeeping issues, some expectations issues since it's week 1. We're going to introduce the overall topic of the course. And then we'll do our normal schedule with the session, which is we'll cover some slides, some topics that are part of the readings and tools. And then finally, as we'll do every single week during the session, we're going to cover the assessment in detail, question by question, topic by topic, to make sure that you feel comfortable that you know what's on the test. It's not that I'm going to give you answers. I'm not going to give you the exact question. But what I will do is I'll give you notes if you'll take them in order to know exactly what you should study or what you should be prepared to see on the test so that you can go and study more, have a more directed study, a more focused study on those topics that you must know for purposes of the test that week, okay? So that's the agenda for most sessions is, go over some of the slides for the chapters, the required readings, and then make sure that we cover the test and, like I say, go question by question over the topics so that you feel comfortable that you know exactly what is coming for the test each week. This course is formatted fairly similar to others that you've probably taken in that we will have a discussion board, an assignment, and a test every single week except week 4. And in week 4, we'll just have a final test, okay? And then, of course, along the way, we have our daily checkpoints, right? So is anybody got any questions? Are there any questions regarding, kind of the course outline, what to expect from the course? That's a very good question, Amanda. I hadn't even thought about it, but Monday is the 4th of July. We probably will need to push the class back by a day or 2. But let's get there first. A lot of the festivities that are going on in where I'm at in Utah County are happening on Saturday night so that people won't have a late night, the day before a work day on Tuesday. So there is a chance that I still might have the session the 4th, but we'll cross that when we get a little bit closer to. And I'll be sure to let you all know If I do change it, I'll send out an email and put it on the announcement board. Okay. But good point. We do have some holidays this month. At least if you're in Utah, we've got 2 of them, right? With the 24th as well. I think we still, no, actually the course ends, I think, right before the 24th. So just the 4th, and we may push out, like I say, the class a day or 2 next week, but may also have it because, like I say, with a school and work day that next day, a lot of folks are doing the festivities over the weekend, Saturday or Sunday. All right, good question though. Any other questions about the course outline, and what to expect as far as the basics of the course before we get into specific expectations for each area? Okay, if you do have questions, just jot them down, send me an email. That leads me to the next kind of housekeeping item as far as the course is concerned, which is communication with me. I will put things on the announcement board fairly regularly. I'll also email you out if there's something that I feel is really important. But most everything, just look to the announcement board. If you need to communicate with me, instead of replying to the announcement board or replying to something that I've posted on the actual site, the very best way to get a response from me in a timely manner is email. So please use the email system and zip me a quick email. I already had 3 or 4 emails today that I've already responded to. And even though I have a day job, within 24 hours, I should be able to get back to you via email. Now, because I do have a day job as a investment professional over at Zions Bank, I'm not able to answer calls usually during the day from students because that's I'm at my day job, right? I'm meeting with clients and doing other things, and so phone access is a little bit less effective. Highly encourage you to zip me an email. If you do feel like leaving me a voicemail, you're welcome to. Obviously, my number is listed. It's 801-427-3989, which is also the part of the URL for tonight's for every week's live session. But you're welcome to call me, but just know that the expectation probably should be that you'll be leaving a message and I'll be calling you back. And like I say, sometimes I can respond a little bit more quickly via email and a little more detailed via email. Okay, so as far as communication is concerned, that's that. As far as who I am, I have been working in the financial services industry for almost 15 years. I have 2 master's degrees. I'm a certified financial planner, and basically I've taught for about 6 years because I enjoy teaching on the side. But it's I'm not a professor full time. Like for example, today I set up some accounts and did some financial planning for a couple. He's a doctor, she's a retired attorney, and we're setting up different investment accounts. An IRA account, we're setting up a non-IRA account, and doing all kinds of different types of investing for this couple. So that's my day job. Fortunately I think for you all, because I'm not a full-time professor, I don't really buy into some of the traditional things as far as some educators don't have a lot of experience in the field that they teach, real live experience. And other times they also take, I think sometimes, like grading and how hard things should be a little too seriously. I mentioned I've got some different degrees, and as I was going through school myself over the years, I'd come across professors that just made it really difficult, to enjoy the class and to get the grade that I was trying to get, even if I was really putting a lot of effort into it. And I'll commit to you, as far as an expectation for this course, that if you put in sufficient effort, do the work, right, you'll probably get the grade that you are looking for from the course. I don't have any kind of preconceived notion as far as how many of you need to get A's or B's or C's or fail the class. I'd really like to see all of you get an A. And all of you are able to get an A if you get your work done, right? So what are the expectations for an A in the class? Just get your work done and get it done on time and follow instructions. It's not rocket science. Just get all your work in, get it done on time, and follow the instructions. Okay. And even if you mess up on a few things, you probably still can get an A if the effort's in the right place, if you've really efforted the course. Okay. So that's the A expectation. As far as passing the class, most of these classes, and maybe you guys can chime in if you've had a different experience, but most of these classes, if you complete all the work, you'll pass the class, right? Even if you struggle with the content. And then finally, the most common thing that happens where people don't pass a class is just simply that they don't do the work. And many times the reason for the fact that they didn't complete the work is they just fall behind a little bit, and then they try to get it all done last minute and they run out of time. And my experience with online courses is if you procrastinate and have everything due at the last minute, something usually comes up as far as a family emergency, a medical emergency, something seems to always, the computer breaks, you don't have online access anymore. Something happens to prevent you from getting things done on time, if you really procrastinate and hold it all till the end. Okay, so just something that you all already know. It's a lot easier to pass these classes and get all your work in if you stay caught up, right? All right, one more quick note along those lines. I do accept late work all the way up until the last Saturday at midnight. I can't accept anything after Saturday at midnight at the end of the course. So in week 4, and I'll remind you of this in week 4, but in week 4, at Saturday at midnight's a hard cutoff. Up until then, I do accept late work. However, I do discount late work. So I understand that there will be issues and circumstances that sometimes prevent us from getting our work in on time. However, I can't give full credit and fairness to the people that do turn their work in on time and make the sacrifice to do so. Let's see, should they be scheduling another class along with this one? Troy, I'm not sure I understand what you're asking. For a different course or for this course? If you have 2 classes, you should have two different sessions, right? So this session is only good for 333, right? And if you've got 2 different classes, then you'll need to have another class on the schedule, right? And I don't know, I assume, Troy, that you're meaning that you've got 2 online courses, right? So you'd have a different online professor as well. They should both show up, both your courses, under your online profile. Oh, you've got one in the classroom. Okay. So that's different. You've only got one online class, then I'm the only one that you'll have a course with or live session with each week. And and for some people, when they have 2 classes, they will have classes right on top of each other. Professors will schedule times right on top of each other, and so you can only make one or the other. And I understand that. That's the reason we'll post all the recordings from this class so that you can review them. Are any of you new or brand new to online courses, this mod? Or have you all taken online classes before? Okay. So it sounds like most of you have had online classes before. Yeah. Sounds like, okay. Okay. Yep. Most of you have had plenty of online classes. So if you do get hung up on anything, just send me a quick email. If you can't find something, or sometimes it takes a little while navigating the site to get to the ebook, for example, because it's not very straightforward as far as I'm concerned. That's okay. If you just send me a quick email, I can maybe help you find it. We can talk that through. Anything else, just let me know. Okay, so we talked about expectations for getting an A or passing or failing. We talked about how you can turn in late work. However, late work after the week that it's due will be discounted. We won't be able to give you full credit. And then how there's a hard and fast deadline, at the end of the course, in 4 weeks after week 4, where I can't accept any late work. That's just school policy after midnight that final week. Okay. All right. So let's talk about some specifics as far as the actual content is concerned. And for some of you, this will be review, and I apologize, so I'll go very quickly. But what I find is that it's always good to review this information just to make sure that nobody can say, hey, I didn't know that this was the case. I didn't know that that's what you expected from us, and so that's why I didn't do it. So let's talk about a few things. As far as checkpoints, you've got 1 day, right, 24-hour period to get done with each checkpoint. They're 5 points each. They can really help your grade. The most extra credit opportunity, in fact, the only extra credit opportunity in most cases that you have in a class like this is to accomplish all your checkpoints, because if you accomplish all your checkpoints, you have over a half a letter grade in extra credit available to you. So if you'll just be consistent with checkpoints, not only do they help your grade because they're graded, they're 5 points each, but they also provide you a lot of cushion and extra credit. I found when I was taking online classes and they had something similar to our checkpoint system, that was one of the key reasons why I was able to get the grade I wanted in a lot of different courses, because I had that cushion, I had that extra credit associated with those daily checkpoints. And I don't know if you all have found that out for yourselves, but just make a consistent, make it very consistent. Do it first thing in the morning, or do it at lunch every day, do it at night every day. Take just a couple minutes, doesn't take very long at all, but make sure and log in every day to get your checkpoint done. And like I say, a half a letter grade, okay, so over 50 points or a half a letter grade is available to you in extra credit. So if you come to me and say, hey Dave, can I get some extra credit? My likely feedback to you will be, first of all, do you have all your assignments turned in? And second of all, have you been consistent with checkpoints? Because that's your easiest, best way to get extra credit points in a class like this, okay? So that's checkpoints. As far as discussion boards, we've got discussion boards for the first 3 weeks. Discussion boards are pretty straightforward. The instructions are very clear. We need 2 to 3 paragraphs. We need at least 1 to 2 references. We need substantive paragraphs, not just 1, 2, 3 liners. We need some significant information for the main post. And we need at least 1 post done by Wednesday at midnight. We need all 3 posts done by Saturday at midnight for full credit. And one of the things that I always like to bring up on discussion boards is sometimes discussion boards become a situation where people are just cutting and pasting from online research. And the discussion board is not a place for cutting and pasting. The reason it's a discussion board is because it's more about our opinion. It's not the information that we find online that's as important as it is the opinions that we form and the feedback that we give to the topic, okay? So we still expect that you'll go online and research, right? But I don't want to see a paragraph that you found online somewhere. What I want to see is you integrating into your opinions, some feedback on maybe an article that you found online, and then still referencing, of course, that article, but without kind of the cut and paste job, okay? And of course, the school, as you all probably know by this point, takes plagiarism very seriously. That's a form of plagiarism. We don't cut and paste. When you turn in assignments, make sure that you're not cutting and pasting anything, and make sure that you're always giving credit where credit's due for information that you find online. They have a program that automatically checks for plagiarism, so please don't test that. Don't go out and find a paper online to try to submit for one of your assignments thinking that might be an easy way around it. That plagiarism check, if that alarm goes off, and that light goes off and we see that that's an issue, we'll be in touch with you, and you only get 1 strike on something like that. I'll make you redo the assignment, and if it happens again, you'll fail the class. So just be very careful about that. It's something that we probably don't need to bring up every single course, because most of you already know that, right? Most of you already know that situation. But for some reason, I find that it's very common on the discussion board for people to cut and paste and not reference the way they should. So just be careful with that. So moving on to assignments and the expectation on assignments. Each week we've got an assignment, weeks 1 through 3. Most of them will be kind of chapter end, short answer, summary type questions. And I've already gotten a couple questions or concerns about this week when the assignment says, hey, here are the questions, and then it says something to the effect of, write 3 to 5 pages, APA format, yada, yada, yada. So people are already asking me, hey, how am I going to use APA format when it's a short answer question formatted assignment? And my answer to that is, I still want you to number the questions. I want you to give your answers in short answer format, but short answer format that's in full sentence, paragraph form, not half, 1 word answer, half sentence answers, that we're not trying to be official when it comes to our grammar and our spelling and things like that. So please be a little bit more formal with it, but doesn't need to be in complete essay form necessarily. It just needs to be short answers to the questions, but make them more substantive than just a 1 word or 1 or 2 lines that don't even make sense. They need to flow. They need to have, good formatting. Okay. And then if you've been very complete in your answers, getting under that 3-page minimum is not going to be an issue. If you're leaving out detail, then getting under that 3-page minimum will be an issue. So some people I just encourage to get to a 3-page minimum the first week especially, and then go from there. There may be weeks where you can do a little bit less, but we still want you to be very complete and thorough about how you answer it. I'm not going to dock you, though, as far as your score if you don't have everything in perfect APA format. I'm not nearly as concerned about the APA formatting as I am just that you're being very complete and thorough about your answers. Okay? So this week is on page 357 in the ebook. The questions they are short answer questions, although when we say short answer questions, some classes, like I say, mean one word or a half a sentence. These are going to be complete sentence thoughts, and in most cases, I want you to put together a paragraph or two based on the question. Okay, so that we get to that writing requirement of 3 to 5 pages that the assignment asks for. All right. So, any questions about this week's assignment? What's due? You're going to be completing a paper, right? But it's not going to be like a story paper or research paper. It's going to be paragraph to 2-paragraph answers to short answer questions at the back of chapter 9 on behavioral finance. Okay. Any questions before we move on? So one quick thing about assignments, real quick. When you submit an assignment, I will give you grading and feedback, and if you would like to resubmit your assignment, you are always welcome to. Okay. And why would you do that? Because I will award additional credit for additional effort that you put into it. So if you miss something on the instructions on one of the assignments, or if you give the wrong answer to a few of the questions, don't fret. In my grading feedback, I'll usually say something effective. You got 1 and 3 wrong. You're welcome to resubmit for additional credit. What that means is review 1 and 3, go back to the book, and review the book, the chapter, because these questions are straight out of the chapter, right? So if you've read the chapter and if you go find the information in the chapter, you'll always be on track, or I shouldn't say always, but you'll usually be right on track for the answer if you've read and reviewed the chapter before getting these questions. But anyway, if I ask for a resubmit, you just go back to the chapter and then potentially resubmit for additional credit. Okay, so you can resubmit assignments for additional credit. All right, so any questions about assignments, discussion boards, checkpoints, the normal stuff, right? Amanda, you're on top of it. You've heard it all before, right? One of the only things that's a little bit different between my courses and others is the assignment resubmission for additional credit. So, yeah, Troy, so when you're doing the assignment, I would strongly encourage you to use the book every single time as one of your sources, right? Because why would you go outside of the book when most of your answers are right there in the book? So you're good. So I would just encourage you to have at least one more source every time you do an assignment, though. Okay? Thanks, Amanda. I wish more people took advantage of it. It always sounds like a nice idea at the beginning of the class, and then, we're all so busy. Sometimes people don't take advantage of the fact they can resubmit, and it doesn't end up helping. But just so you all know, that's available. Let's talk real quick about grading. I already alluded to the fact that, grading will have feedback, especially on the assignments, if you can resubmit assignments. I don't allow test retakes, okay? So assignment resubmissions, yes. Test retakes, no. So be very, very careful when you go in to take your test that you don't accidentally submit or time out before you've had a chance to take the test, okay? It seems like every class I have somebody who says, well, I didn't have enough time, or I accidentally logged in or submitted on accident, and it takes quite a bit of effort on my end now. It used to not, but now I have to have the school reset exams, and so please just be careful about that so we don't have to worry about that. But I don't allow retakes. Yeah, and that's a good point, Troy. Sometimes the textbook explains things one way, and then if you go to like Investopedia or one of the sites online like Investopedia, it can explain it a little bit different. Sometimes it's a lot more clear, and you get a much better understanding if you've got two different sites, right? Two different sources, I mean. So good point. All right, so I think we've talked about all the housekeeping issues. Now we can finally get on to some of the content. We don't have a lot of time tonight. We'll probably only get through chapter 9 before we need to spend the last few minutes on the test. The test only has 10 questions worth 5 points each, so it's not a big test. And the questions are straight out from the content, that you'll be reading in chapter 9 and 10. So pretty straightforward. As far as the test, Troy, Judy, good work. I already answered it before I even saw the question. They are timed. However, getting a full hour for the tests up until the final, and I think the final you get 2 or 3 hours. Getting a full hour is plenty of time, especially a week like this week where there's 10 questions, some true-false questions, but mostly multiple choice. You could probably get through it in 10 minutes if you've studied the material. And I don't say that to make some of you feel bad if it takes you longer and you're more careful and thorough about it. I'm just saying if you've really done, your studying and put the time in, you should be in great shape. I think you'll be just fine, Troy. Usually in these courses, if we find that a lot of people are timing out, like if they can't get through the material, which has never happened in this course for me, but if I were to see that a lot of you are timing out on the amount of time that you have, I would add time to it, right? But we've set them up in a way that we think there's plenty of time for each one of them to complete it. Okay? All right. Okay, so can everybody see, obviously, chapter 9, and is your screen moving? So now are we looking at random walk theory? Sometimes when we look at the same screen for long enough, the software freezes, so I like to double check. So looking at the random walk theory. So as I mentioned earlier, today, we're trying to give a basis for why people make the decisions they do regarding investments. And so we're going to give you some different ideas and theories about why people make the decisions they do regarding investments. And it's very important from 2 different perspectives. One is we want to understand for ourselves, right? When we go to make investment decisions, why do we make the decisions we do? We should have some construct or some reasoning for why we're going to make the decisions we do. We should have some plan or strategy for that, right? And so hopefully some of this information today will give you some ideas on how you could go about that. But secondly, and perhaps even more importantly to many of you who maybe don't really invest and aren't going to make a lot of investment decisions in the near term, is the fact that the market is made up of stocks, right? The stock market, when we talk about the stock market, but all different investments are made up of a pool of investments, and their pricing is derived solely from folks being willing to buy and sell those investments. So the easiest way that I can describe it for most of you is the price of a home. Okay, when you think about the price of a home is only as high as somebody's willing to pay for it, right? If a home goes on sale and it's listed for $200,000 and nobody's willing to pay that, is the home really worth $200,000? The answer is no, right? The home is only worth what somebody is willing to pay for it. Now, back in 2005 and 2006 and 2007, people were willing to pay a lot more than the next person and fight against each other to buy a home, right? And so pricing went up significantly during that period before it fell apart in 2008 and 2009. But the idea is the same for stocks and bonds and any other kind of investment, and that is that the value of those stocks, bonds, and other investments is only as high as somebody's willing to pay for it. The moment that there's no one there willing to pay a price, the price will go down, okay? And the price will go back up when people are willing to pay that price or more for whatever investment it is. So let's take an example of Walmart stock. Walmart's a great company, right? A big company. Whether or not they're good or nice or whatever, or good employers, let's leave that aside, right? But Walmart as a company makes billions of dollars. They're highly successful. They make a lot of money. They're very profitable. So it would stand to reason that their stock would be very good. Well, their stock is only as good as people are willing to pay for it. Okay? It's not just about how good the company is, which does have an influence on what people are willing to pay. But more importantly, it's just however much people are willing to pay for it. And one of the things that comes into play, and this is important and something that I brought up on the discussion board already this week, is when you have news like Brexit, which was Great Britain leaving the European Union or voting to get out of the European Union, that happened on Friday, actually Thursday night coming into Friday. A surprise like that makes people less interested in buying stock, less willing to buy the market because they're concerned about news like that. And because they're concerned and unwilling to buy, the stock market got beat up, right? Got hammered. So people's perspective, that's why a lot of people don't like investing in the market, don't like investing in bonds, because you can have a great company that gets beat up and goes down because people aren't willing to pay for it. And if they're not willing to pay for it, then it goes down. Okay? So that's one of the most important reasons why we learn about behavioral finance when it comes to investing, because knowing why people make the decisions they do doesn't necessarily allow us to predict what people will do, but it does help us to understand why, things happen in the market, why it goes up and down so much. Good question, Troy. On Friday, if you had an exchange traded fund that was just in Great Britain stocks, it was down about 12% just on Friday. Okay, so to put that in context, one day, right, their market was basically down about 12% as far as the stocks that are traded in their market. Our market here, even though the market was down 600 points, that only amounted to just over 3% as far as our market being down. And then today we were down another 1.5% or so. So in total, we're down almost 5% since it happened. But Great Britain was down 12% just in that one day. So did it affect their stocks more? Yes. Did it affect all European investments more than it did the US? Yes. However, it still hurt here, right? We still got beat up here as well. Good question. All right. So let's talk about some of the theories. Like I say, we're not going to get through them all, but this is all material from Chapter 9. And then, like I say, here in about 20-25 minutes, we'll take a few minutes and just make sure that you understand what topics. And if it were me, I would take a few notes on these topics that are going to be on the test this week, so that as I'm reading, if I have a notepad next to me as I'm reading the chapters, I can make sure and just look out for those topics. And you'll find if you're looking out for specific topics as you read, it helps you to comprehend what you need to know for the test. So that's the point of our assessment review or our test review here in a little bit. Okay, got a little bit of water. So, random walk theory. So what is the random walk theory? Well, it says it right here. Let me get my mouse going. Basically, the idea is that stocks are unpredictable, right? That we don't know where stocks are going to go. They're erratic. They don't follow patterns. And they will do whatever they're going to do based on what the economy does, right? So one of the things that people will say every year, you come into January and like the Goldman Sachs and JP Morgans and your big banks and big investment firms, they'll come out with their predictions each year for what the market will do, and most of the time those predictions end up being wrong, right? And they're just their best guess, because in all reality, this random walk theory does have some credibility, which is it's not predictable. We don't know going into most years what really the market's going to do. And in fact, we don't know most times really what individual stocks are going to do. We don't even know like what Apple stock will do this year, Tesla stock. These are stocks that are big companies that are followed, that are tracked, but they can have news at any point throughout the year that might, hurt the stock, and we wouldn't have known that coming into the year, right? So the question should be, the follow-up question to the random walk theory should be, why would anybody ever invest in something that they can't, that there's no predictable pattern to? And the answer to that as an investment advisor to my clients would be, if you go back 80 years, there is a trajectory, right? A trajectory, a positive trajectory on the market, because companies over long periods of time make money and become more valuable. When you get shorter term, the shorter term you get, the more you have this random walk theory issue going on, which is we can't predict very well anything in the very short term. I have no idea what Costco stock is going to do tomorrow, right? It could go down, it could go up, I have no clue. But if I feel like Costco is a very good company and I'm anxious to have Costco stock because I think they'll do very well over the next 10 or 20 years, then actually it's very highly probable that over a 10 or 20 year period of time that my investment in Costco stock will go up. Okay, so predictability becomes pretty good actually as you get longer term, but short term, the market and investments are not very predictable at all. Okay, and it falls into this random walk theory pretty tightly. Now, what do we mean when we talk about efficient markets? An efficient market means that all the investments in that market react immediately. Okay, they react immediately to all the information available. So realistically, markets can never be perfectly efficient, right? But this theory isn't saying that it's perfectly efficient. This theory is basically saying, look, because of how information is so easy to access now, at any given point, everybody who's interested in Disney stock can know right now, if they were to look it up, how Finding Dory is doing, right? That'd be pretty easy. That's all public information. They'd be able to find out how ESPN has been doing, which Disney owns. They'd be able to find out how Disney has been doing with their theme parks, both in the US and around the world. That data, that information is all public information. It's very easy to access. So if I'm interested, that information is just common knowledge, and I will use that information because it's available to me to determine what my price should be on Disney stock. So efficient markets, basically, the assumption here is that people have access and people make decisions based on that information. Okay. Now, in all reality, does everybody make a decision, an educated decision based on all the information out there? What would you all guess? Troy, Amanda, Judy, Frida, Christina, or Ron, what would you all guess? Do people do lots and lots of research every single time before they invest? The answer, Troy and Amanda and Frida, you're right, is no. And the reason for that is most of us are too lazy to do all that research, right? And a lot of us will just invest in companies that we know and like. And frankly, sometimes that's a great investing approach, but it's not us using all the information available. What it is us saying, you know what, I really like Disney. It's my favorite company. I like going to Disneyland, so I'm going to invest in Disney stock. Or I just bought a pair of Nikes. I really like the brand Nike or Under Armour, so I'm going to invest in their stock. So it's not me finding all the information that's out there, even though that's what makes markets more efficient. It's just me liking, one company over another. Yeah, and Troy, that is excellent point. A lot of us, it's not just that we're lazy, right? A lot of times it's just that we don't have a clue what we're looking at. When we look at financial statements for example, for Microsoft, and they come out with their financials every quarter, we might look at them and just say, I don't even know what any of that means. So that doesn't really help my decision-making process. Yeah, so efficient markets do assume that people can interpret all the information as well. Not only do they have access to it, but they can also interpret all of it. So one of the things that's important about this theory, right, we've already said that it's not perfect, right? Not everybody uses all the information and understands all the information out there, but it's important to note that when you're investing in especially large companies, so a company that's well known, let's say it's Warren Buffett's Berkshire Hathaway. Berkshire Hathaway is one of the largest companies in the world. Warren Buffett's he is by far the most successful investor in the world, at least historically. And so you want to invest in his company, which is called Berkshire Hathaway. So you invest some money in Berkshire Hathaway, and then the next day some news comes out about Berkshire. And the news is negative, right? You would assume that the stock would go down. In an efficient market, the stock does go down. And most times that is the case. There are some exceptions. If there was good news the next day, the stock should go up. The point of efficient markets is that whatever price you bought it at, that was the fair market price that day until new information comes along. Okay? Does that make sense? So it's not like you can go out and invest in Walmart today and think that you're getting this screaming deal on Walmart stock. Well, whatever you bought the stock for is what its fair market price is today, and that's based on all the information that's available to people. So it's not a screaming deal today unless something happens that's fortunate going forward, right? So unless tomorrow they announce that, sales are up and then their stock goes up because of an announcement like that. But as of today, you're just getting a fair market price for what you pay for the stock. That's what efficient markets are saying. And in large part, this is pretty true. This holds out pretty well, meaning most stocks are fairly priced for what they're worth, right? And what people expect them to do. And then there are always surprises and there are always things that change, but as of today, whatever you bought the stock for is probably the fair price for today. Okay? All right, so let's look at an example really quick graphically. And I think this is a helpful thing to look at. Here are the Walmart quarterly revenues for, let's see what time period we're looking at here. I've got my control panel over the time period, so I've got to move it real quick. One sec. No, I can't move it. So you guys know the years. I don't see the years. I assume we're talking, multiple years here, right? That's awesome. Can't get to it. So anyway, each one of these red dots probably represents a full year, in between. And probably what we're dealing with, so 12 different, thank you. So what we're dealing with here is 12 years of history, over a decade of history in Walmart revenues. And you can see they've made significant improvements in their revenue, right? Over on the left side, we start at like 60, and that's 60 billion in quarterly revenue. And then we go all the way up to 120 billion in quarterly revenue, as we get closer to 2012. So the question is, if you own that stock, what do you think the stock's done over that same period? As the revenues and profitability have gotten really good, right? I mean, they've just gone up. They've doubled over the past 12 years. Okay, so next screen. This is Walmart stock over that same period. Is this what you expected? So the stock has gone up, right? It's gone from 45 to 60, but most people looking at this chart would say that really doesn't look that good, right? I mean, if it takes you 12 years to go up 25 bucks, that's not a very good return, right? Even though the company's doubled their revenue, they definitely have not doubled their share price, right? We've gone from about $50 a share up to about $60 a share, which on average, only about $10 up. And so a lot of people look at this and they say, what does this mean? Why does this happen? Why can a company double in revenue but not double in price? It only makes sense that the stock, if a stock is an equity position or a partial ownership position in the value of that company, why wouldn't the value of the company go up that much? And Troy, on a percentage basis, it wouldn't matter how much you bought, right? Because on a percentage basis, you'd go up the same no matter how much you purchased. If I purchased 1 share or if I purchased 1,000,000 shares, I'd still go up the same percentage over that period of time. Now, obviously, if I purchased 1,000,000 shares, I'd go up a lot more dollars, right? But on a percentage basis, it'd be the same either way. But the point of these two slides is to say that a lot of people purchase stocks thinking that they're going to get a part, the increase in a company, how much profit they have or how much revenue they have. And it goes back to what I mentioned at the beginning, which is the number one reason why a stock price is the price that it is because people perceive it to be that way. So what happens is over the last 10 years, Walmart stock has not gone up as much as people expected it to, in part because it had a significant run before the period that we're looking at here, where the stock quadrupled over a very short period of time because the company was growing so fast. And now that the company's growth has started to slow, or at least people think that the company can't grow as fast anymore, the stock price hasn't grown as much. So what dictates the stock price? Yes, in part, it's how good the company is and how much profitability the company has, but most of a stock price and how much a stock price grows by is based on how much people are willing to pay for that stock and we're willing to pay for a stock based on how much we think the future holds as far as growth. Okay, so it doesn't matter what you've done the past 10 years, whether or not you've grown super fast the last 10 years. What we want to see, or what we're interested in as investors, is what are you going to do next year and the year after and the next 5 or 10 years. So a company like Apple is another good example of this. Apple is up like 2,000% in the past 5 years. Phenomenal increase in the stock price because people were highly confident during that period that they were going to grow very, very fast. And then if you look at Walmart stock, or excuse me, Apple stock is what we were talking about. If you look at Apple stock over the past 6 months, Apple stock has gone from a high of about $135 down to a low, and we're near the low at this point, about $92, $93 a share. What does that represent? That represents about a 30% decrease. You've lost about a third of your money in Apple stock over the past 6 months. Does that mean Apple's a bad company? No. Does that mean Apple's revenues and profitability are down? No. They're at all-time highs. They're doing very, very well financially. However, what it does mean is that investors have started to sell the stock thinking that the prospect of the stock going up quickly over the next 5 to 10 years isn't as good as it was over the last 5 or 10 years. It's harder now for Apple to grow as fast as it did before going forward, right? And that's kind of intuitive, right? When a company is in kind of growth mode stage, when it's smaller and when it's more innovative and when it's more nimble, it's a lot easier for it to grow fast. Then when it gets big, like Apple or Microsoft or Walmart, it becomes more challenging to grow as fast, right? Anyway, so that's an example of this behavioral finance issue where a lot of what we're dealing with the market and stocks and pricing has more to do with people's perceptions and perspective about stocks and less about, how much revenue there is or what the history's been. This is just a quick interesting chart that basically says when stocks come out with positive or negative news when it comes to their earnings, which their earnings are once every quarter, the biggest price changes happen right around that point. Right? So within 0 to 3 days, what this chart is saying is within 0 to 3 days, we have significant stock reactions or price reactions to a stock, which makes sense when you have positive news. Here's another interesting chart. Basically, if you surprise in earnings to the positive, the day that it happens at point 0, right, your stock goes up significantly. But then it also drifts up even after that. And the opposite is true. If you have negative earnings or a negative surprise, you tend to drop off significantly that first day when people are reacting to it, and then over time continue to drop off as people sell off that stock and don't have confidence in your ability to make money. So anyway, that's just some interesting data there historically on what happens and why stocks move again. Less about good company, bad company, more about what do people perceive you're going to do in the future. And if you have earnings that surprise everyone to the negative, then investors automatically assume going forward that that's probably going to be that's probably what's going to happen going forward. And the opposite is true. If you surprise to the positive, investors automatically assume going forward that you'll probably do better and surprise to the positive going forward. Now, is that always how it works out? No, of course not. But that's how investors perceive what's happening. Okay. Now, there's some other things as far as investor behavior that are interesting to consider. Got a couple biases. One is overconfidence. Investors many times will be overly confident in their ability to judge a company, and this usually doesn't end well. Most of us who have been around investing for a long time have gotten to a point where we understand anything can happen, and we understand that the market is more about time and less about timing. And what I mean by that is it's more about holding something long term. Holding very good positions for the long term always wins. Speculating on the short term, on trying to get high growth, high potential possibilities in the short term is just what I said. It's speculation, right? You never know what you're going to get. But most investors who trade stocks on their own and are retail customers of like an E-Trade or Ameritrade, they become overconfident in their ability to trade. They might have a few trades go right, and then after that they make a lot of poor decisions because they're overconfident. Another bias has to do with self-attribution bias, and basically, this is kind of similar to the overconfidence issue. When somebody says something that you agree with, you tend to take that information to heart. If somebody says something that you disagree with, you tend to disregard that information, right? So you tend to make your opinion more important than anybody else's, and that can cause problems as well. So if investors start panicking and selling, that would be the best time to hold on to what you have. Yes. So Troy in the bank, when I do seminars for employees of the bank, when I'm just trying to help them and educate them on what to do, when the market's down, I tell them you have three options, and it's three options that are easy to remember because we're at a bank, and in banking terms, you have what's called the automatic clearing house, which is the ACH. So a term ACH, which is just a transfer between accounts, right? Well, ACH in terms of when people start panicking and selling things means you have three options. You either add to your account, which sounds crazy, but when things are bad and people are panicking, that's when you should add and buy, with your account. Or you change your account to become more aggressive, or the third option is to do just what you said, Troy, is hold on, right? And a lot of times people can't afford to buy more or add to their account, or they just can't bring themselves to do that because their gut's telling them that's a stupid thing to do when things are bad. It's the right thing to do, but your gut tells you not to do it. And as far as changing an account, some people just don't feel comfortable or confident changing their account. So, then they're stuck with that third option, which is to hold on. And that's a great option relative to the other thing that people do, which is they panic sell, right? And that's when you get into trouble. That's when you lose a lot of money in the market, is when you panic sell, because then you've lost it, and you've lost it for good. If you hold on, historically, you always make it back. You always do fine. But sometimes it's a time issue, right? You got to wait. And most of us as investors are not very patient, just for the record. We've got some more theories and risk problems that people will do. There's a lot of them. So you'll get those from Chapter 9. Okay, let's spend a few minutes on the test. Any questions, though, about kind of the introduction, I should say, to behavioral finance? Because we really did not get into a lot of the information, but gave you a little bit of a preview on what you'll be reading in Chapter 9. So questions, concerns before we get to the test material? Remember, even though we didn't cover it, bonds are part of course, the test this week. It's the required reading comes from Chapter 10 as well. All right. By the way, good questions tonight, Troy. Thanks. Appreciate that. All right, so number one on the test. What you'll need to know for number one on the test, and actually there are like 2 or 3 problems on the test that have to do with efficient markets and what the efficient market hypothesis or efficient market theory has to say about investments and investors. So if you'll pay very close attention as you read in the book to what the definition of efficient markets is, okay, what is the definition of an efficient market, you'll get number one right on the test. Number two on the test, you'll want to know if you agree, okay, with efficient market theory. So what does the book tell you? If you agree with efficient market theory, what type of investment should you be investing in? And let me give you a hint. There are actively managed investments where you have managers trying to outperform the market, whatever the market's doing. And then you have passive investments like index funds where no one's trying to outdo the market. We're just trying to get what the market does. Okay, so those are 2 kind of broad categories of investing. If you believe that markets are efficient, or if you believe in efficient market theory, you'll want one of those or the other. Okay, so as you read through the material, you want to see what the book says about what your preferences would be for investing if you completely agree with efficient market theory. Okay, and efficient market theory is just what it sounds like. It's a theory, right? So you don't have to embrace it. You don't have to agree with it. most investment advisors are somewhere in between, right? They don't 100% agree with efficient markets because it's not realistic that everybody is able to take all the information that's out there and use it. So markets aren't 100% efficient. However, different investment advisors disagree on how efficient or how inefficient it is, and that's where kind of the debate comes in. Number 3 on the test asks you to understand and demonstrate that you understand why in efficient markets does the market appear to be random. Okay, why do efficient markets cause, if you agree with efficient market theory, then why is the market random? Okay, and it's really intuitive. That's not a question that's meant to be hard. You'll just need to understand why, if you agree with efficient market theory, that you would observe the market acting randomly. Okay. Number 4 on the test, you'd want to know what the basic assumptions of efficient market theory are and identify them. So what are the basic assumptions of efficient market theory or the efficient market hypothesis? That will get you number 5 right as well. Basically 1 through 5, and basically everything that the test is testing you over from chapter 9 rests on understanding the basics of efficient market hypothesis or the efficient market theory. Okay, so that's the first 5 questions. The next 5 questions are about bonds, which is coming from chapter 10. The first question about bonds asks you how do you get return from bonds? Okay, and you just need to understand what bonds pay. So bonds have 2 different things going on. Bonds have an interest rate or a dividend that they pay, so they give you some income. And bonds also have a value, that can go up and down. So if that value goes up and you get your income, then you've got 2 sources of increase or return. If the bond value goes down and you still get your income, then the bond value, hurts you, but you still got income from it. It's like having a rental property where you have rents, right? That's like the dividend of a bond. And then you have the appraisal of the property, which can go up and down depending on the value of the property, right? And most people invest in rental property because they want both the increase of the property value and the rental income, right? And that's the same with bonds. Most people want both the increase in the bond value and interest. So that's number 6 on the test, understanding how we get returns, whether the returns are made up of from bonds. Number 7, you'll want to know basically why people invest in bonds. Okay, I've already told you one of the reasons, which is the fact that you can get income. Okay, bonds pay income, and bonds, just to back up a little bit, bonds are when we talk about bonds, we're just talking about debt. We're talking about debt of a company. So we talked about stocks earlier. That's the equity of a company or having ownership in a company. Bonds are having the debt of a company. So when Walmart wants to build 200 new locations in China, and they don't have enough, even though they're a rich company, they don't have enough money in the bank to build 200 new sites. They're very expensive. Each one of their locations is highly expensive. So they may borrow money in the form of bonds, which means that they go out and they borrow money from you and I as investors, and then they pay us back interest and principal over time. And that's what gives them the money that they need in order to expand rapidly. Okay. So for number 8, we want to make sure that you understand what type of investors invest in bonds and why would you invest in bonds. What does the book say about that? You'll get number 8 right. Number 9, you'll want to know how bonds trade relative to stocks. So stocks, trade on the New York Stock Exchange. They trade, on the NASDAQ. They trade. They're very active. There's a very active trading market for stocks, right? Where I go find a buyer and a seller on exchange like the New York Stock Exchange, and we agree to a price that I'm willing to buy it out, and boom, it happens. Bonds are a little bit different. I'll tell you they're a little bit different, but make sure you understand what the book says about how bonds are traded. Okay. And number 10, the final question asks you about cereal bonds. Okay. This isn't cold cereal. This is cereal with an S. You'll want to know how often cereal bonds pay interest, first of all, and then when you get your principal back. Okay, when do you get your principal back? Most bonds, just as a heads up, most bonds pay us interest over time, and then they pay us the full principal back at the end. Okay, so it's not like a home loan or a car loan where you have an amortization schedule and you pay both interest and principal over time, right? That's not how normal bonds work. Normal bond investing is a situation where you collect interest and then you collect the full principal amount at the end of the term, okay, instead of getting principal over time. All right, so that's the test. Those are the different topics that you need to know for the test. Any questions about those topics before we wrap up for the night? All right, you're welcome to stay on if you do have questions, but we'll wrap up the recorded part of the session. Have a great night. I'm grateful once again that you showed up to tonight's session. I'll give you some feedback on next week's session before we get there, whether or not we move it or keep it the same. But in the meantime, have a great holiday weekend, and welcome to the class. I hope it's a good one for you, and I'm confident you'll all get the grade that you want from this class if you put the effort in to get it. So have a great evening, and let me know if you've got any questions or concerns. Good night.